Good morning, everyone. The webinar is about to start. Please hang in there while all attendees connect. Thank you. Good morning again. My name is Cesar Iliano, and I'm the Content Director for BNamericas. I'd like to welcome everybody to this webinar. During this session, our regional energy editor, Michael Place, will be showing the most important findings of our annual oil and gas survey, which was done in partnership with ARPEL, the Regional Association of Oil, Gas, and Biofuels Companies in Latin America and the Caribbean. The presentation of the survey's results will be followed by a panel discussion. Michael will be moderating a conversation with Decio Odone, Enauta's CEO, Ricardo Ferreiro, Managing Director of Business Development, Gas and Power and Marketing for Tech Petrol, and Miguel Moyano, Executive Secretary for ARPEL. I would like to remind all participants that they are in listen-only mode. Questions can be submitted at any time using the chat function on the right side of your screens. Depending on time, we will endeavor to answer your questions at the end of the discussion panel. So I leave you now with Michael.
Thank you, Cesar. There were few business sectors, if any at all, that felt the impact of COVID-19 quite like oil and gas. Within weeks of the World Health Organization's declaration that the novel coronavirus was a global pandemic in March 2020, crude oil reference prices had free-fallen to their lowest levels in decades, prompting exploration and production activity to plummet. Efforts to jumpstart Latin America's economy and its energy industry have since been hampered by continued high viral infection rates and the generally slow pace of vaccine rollout programs. It should not be surprising then that more than 16 months after the pandemic's onset, there is muted enthusiasm about the regional hydrocarbon sector's short-term investment outlook, as the BNamericas 2021 annual oil and gas survey attests. Some 98.7% of respondents, which include companies across the oil and gas value chain, as well as government agencies, banks, and other stakeholders, said their operations have been affected in some way by the pandemic in 2021. Meanwhile, 98.1% said they expect COVID-19 health protocols to impact operations and costs to some degree going forward. Despite the difficulties, many participants expressed the belief that the pandemic has made local players more resilient and that an upcycle may be imminent. The oil price crash of 2014-15 had already prompted producers to slim down their operations to previously unseen levels of efficiency. However, the pandemic has led to even greater cost cutting as operators seek to keep their assets profitable. But even with these cuts, projects have had to be replanned and redesigned to adapt to post-pandemic conditions. Some 40% of the survey's respondents said they expected market conditions would allow operators to successfully execute their spending plans in 2021. Another 37% said companies would spend less than their budgets, while 23% said they were unsure. More companies, or 33% of the total, said they expect to increase capital expenditure year on year in 2021 than those who don't, which represented 18.5%. Meanwhile, 41% said there would be no change and 8% said they were unsure. Over half of those surveyed said they expect an increase in the approval of new oil and gas projects in the next 12 months, compared to 22% who said they don't. Over the medium term, 37% of respondents projected a small increase in exploration activity, 31% said there would be a moderate decrease, and 23% forecast little or no reduction. 10% said they expect a large increase in exploration drilling in the near future. Sweeping cost cuts have not been the only consequences of the pandemic on oil and gas operators. State-run companies such as Colombia's Ecopetrol and Argentine counterpart YPF have ramped up investments in renewable energy over the past 18 months, providing evidence of an accelerating transition towards clean energy. There has also been a metamorphosis of sorts further down the value chain. Service providers have had to reinvent themselves by diversifying their businesses and accelerating a shift towards digitalization. Some, such as Schlumberger and Halliburton, have announced plans to sharpen their focus on frontier segments such as carbon capture and hydrogen. 36% of total respondents to the survey said they would raise spending on greenhouse gas reduction efforts over the next 12 months. The same figure said there would be no change, while 14% said investments in such initiatives would fall in 2021. Another 13% said they were unsure. There was a more emphatic response to the question of technology and digitalization. More than 2/3 of participants forecast greater investments in this area in 2021. Meanwhile, 21% said there would be no change, 7% said there would be a decrease, and 5% were unsure. As a direct result of the energy industry's transformation, there is a growing consensus that oil consumption will soon be in decline. 40% of those surveyed said peak global demand for the fossil fuel would occur before 2025, while 38% predicted it would be reached from 2025 to 2030. Only 17% said demand would begin to decline from 2030 to 2040, while 6% said the world's thirst for oil would continue to increase until at least 2040. Brazil was chosen by 27% of respondents as having the best investment climate for exploration and production projects in Latin America, a nod to the country's booming pre-salt segment and the opening up of the national gas market to private players. Colombia was next best with 17% of the vote, followed by Guyana with 12%, Chile 7%, and Mexico 7%. Just under 7% of participants nominated Argentina as the region's top destination for E&P projects, despite new incentives for gas production that triggered a significant drilling uptick earlier this year. Suriname, described as having similar potential to that of emerging oil and gas heavyweight Guyana, was selected by 5% of those surveyed. Unsurprisingly, political uncertainty was the biggest threat to the sector for 37% of the companies, ahead of resource nationalism and increased country risk. The usual suspects in these categories in recent years have been Venezuela, Argentina, and Mexico. Now there are concerns about Peru's oil and gas sector and how it will fare under new President Pedro Castillo, while civil unrest in Colombia halted dozens of exploration and production projects in May and June. So now we're going to move on to our discussion panel, and we're fortunate enough to be joined by Decio Odone, the CEO of Enauta, Ricardo Ferreira, the Managing Director of Business Development, Gas and Power and Marketing at Ecopetrol, and Miguel Moyano, the Executive Secretary of APEL. Good morning, gentlemen.
Good morning. It's a pleasure to be here with you.
Thank you for joining us.
Thank you.
Okay, so as Cesar mentioned earlier, we remind our audience that questions can be submitted to our panelists at any time using the chat function on the right side of the screen. And of course, we'll do our best to answer all of the questions within the given time frame. So moving on to the questions. Over 98% of respondents to BNamericas 2021 oil and gas survey said they expect COVID-19 health protocols to impact their operations and costs to some degree going forward. Are you surprised by this? And when do you think the business environment will return to pre-COVID-19 levels? Perhaps, Decio, we can begin with you.
All right. Thank you very much, as I said, for the opportunity to be here with you. I agree with the respondent. We are going through a large transformation in the energy markets. COVID-19 helped to accelerate the energy transition. And what we are seeing now, and we start seeing some years ago after the shale revolution, is that we were used to see price cycles which used to last for many years. And if you go back some decades, you realize that normally price cycles were long for in the oil market. Remember that we had a long low cycle from 86 to the end of the 90s, and then a long cycle of prices going up from the beginning of 2000 till 2012, 2015. So the shale revolution changed this dynamics, and then we start having shorter cycles. And now I think that one of the reflex of the COVID-19 will be intensifying this effect, and then we will see shorter and shorter cycles. And what are the consequences for shorter cycles? Since we have doubts on the demand, since we have a very quick response from OPEC, OPEC Plus, and American shale, US shale, we will see this short cycle. And short cycles, they difficult long-term planning. They difficult sanction of long-term projects. They difficult especially exploration, and especially exploration in frontier space. So what I see for the future in the industry is shorter price cycles, volatility in price, because you see less exploration, and then sometimes you see less, as a result, less production, shorter markets, high price, response from OPEC and shale, lower price. Then we must be prepared for more volatility and less exploration. That's my view as a result of what we have seen in the market in past years, and especially intensified by COVID and the acceleration of the energy transition.
Very interesting, Decio. Thanks for that response. Ricardo, perhaps you can have the next response.
Oh, thank you very much. I appreciate the opportunity to be with you. And I agree with Decio, and to give some figures for the operators, COVID have increased costs and investment roughly by 5%, okay, because of the measure you have to take, the protocols, the increase, for example, in drilling camps, the for people stay there, no more isolated, etc. And this will remain for the large. We expect it at the very beginning would be 3 or 4 months. We are averaging 1 year and a half, and probably with the new COVID variants would take longer. And also, as you mentioned, this accelerated the energy transition and add more volatility to the market as we usually have. But on the other hand, we have now the shale, and referring now to our case in Argentina, Fortín de Piedra field, in which we are able to quicker respond to the demand, provided the conditions are set. I mean the macroeconomics and the local conditions to do the development. So this put all of us in a more volatile markets, more changing market, but probably today with other tools and technology to quicker respond to those needs, again, provided the conditions are the right conditions. So more risk, more challenge, but more tools to respond timely if everything is set for those conditions.
That's encouraging news. Thank you, Ricardo. How do you feel about this, Miguel?
Okay, Mike, I will not be speaking about the business environment, which I think Decio and Ricardo had perfectly addressed. I will concentrate a bit more on the almost 100% of the respondents saying that the health protocols, the COVID protocols, are impacting their operations. And I don't think anyone should be surprised with this, particularly the impact on operations. We, last year, during March and July, I mean, 5 months mostly, we held weekly experience exchange meetings, virtual meetings with experts from companies operating in America and also outside the region. There were like 600 professionals from 60 companies. It was a really good knowledge exchange, and the experience that was gathered through this knowledge exchange meetings on COVID made clear that there was a need for protocols, particularly but not exclusively, for personnel and operations that are critical to ensure the continuity. And these protocols included issues associated, as Ricardo was mentioning, to remote operations, digital operations, shift personnel, transfer to fields, offshore or remote areas, and also the issue of combining new technology and digitalization with occupational and process safety management. So all that had to be adapted. And since then, what we have seen is that the companies have defined, have adapted, and they also have implemented the business continuity plans, that is emergency plans with the objective to maintain the functionality of the organization to a minimum acceptable level during a contingency. However, a contingency is normally defined for limited amounts of time, and the COVID protocols have been implemented and will probably be staying for quite some time, and that will be impacting the cost. So I am not surprised with that response.
Thank you, Miguel, for that response. Just over a third of total respondents, or 36%, said they expect to raise spending on greenhouse gas reduction efforts over the next 12 months, while more than 2/3, or 68%, forecast greater investments in technology and digitalization in 2021. Has COVID-19 accelerated the clean energy transition in Latin America? I think some of you have already touched on this. If so, what will be the most obvious impact of this in the short to medium term? And will we see major operators perhaps revising down their oil production targets and ramping up investments in renewable power generation or carbon capture and storage in the next year? Or are these still longer term prospects? Perhaps Ricardo can be the first one to respond to that.
Okay, thank you. Yes, as we said before, certainly the COVID-19 has accelerated the energy transition and probably let's say the urgency for people to do something about this, as this was demonstrated because of the lower activity, that there was less pollution in the world. But some structural challenge remains the same as 1 year ago. I want to mean with this that the world needs firm energy. So until the issue of how to storage the energy remains, the usual energy supply, I mean oil, gas, will remain, okay, I'll not say the same because the transition is accelerating, but need to also be on the market to supply the firm energy. That's put the gas, is not any news, but we can see on the future price for the LNG that the gas is becoming very strongly the energy transition reach to until we have the way to storage. So there will be more pressure on the energy transition. There will be more investment for sure. This is being felt by the markets, but some issues need to be solved. Probably will be solved quicker than before, and this also can be clearly seen because of the prices again of the gas and the oil. So we have again a challenge. We need to assess better in the short term, which will be the length of let's call the window to produce more gas and more oil. And meanwhile, all the renewable energies are taking more portion of the market. And again, more challenge and more volatility on the market, but opportunities in both sides in the short and medium term.
Thank you, Ricardo. What are your thoughts, Miguel?
Well, I agree completely with Ricardo, but I don't think the impact of COVID has been the only factor that has been accelerating the energy transition in Latin America and in the world. There were other factors, such as the international mandatory or voluntary agreements to accelerate the movement towards lower carbon emissions, and that has been accelerated by stakeholders' demands. And for example, I will put the ESG requirement, environment, social, and governance requirements, because that has had a strong impact on investors' decisions. As an example, I was reading some time ago, last year, it was created the Net Zero Assets Initiative that includes several of the world asset manager largest investment companies, right? That approximately manage $40 trillion, and they are supporting the goal of net zero emissions by 2050. So that is something that tells us, well, there are financial issues there that we need to consider. And another uncertainty, I think it's important, and that is affecting how we manage this, how the countries, which are the oil and gas resource holders, right, is how to assess the gap between the ambition for rapid energy transition and the actual delivery of energy. That was what Ricardo was just mentioning. I mean, this may require balancing the continued investment in existing fields and the promotion for new field development beyond those that are already approved, right? So, and nowadays, the governments of our region in Latin America still require to translate the pledges that they have been announcing into policies and regulations, and they should be consistent with this transformation. And therefore, many producers may be anticipating a rebound in oil and gas demand in the short term. I want to mention something about CCUS, because that's something we don't have much, and I think Ricardo Decio will probably tell us something about that, because the only example I think it's in Brazil. The fact that several international companies have adopted voluntary reduction agreements, they are already thinking of not looking for new exploratory areas, and they are concentrating on their present production portfolios with a particular focus on low extraction cost assets, right, and using the cash flow to invest in renewable energy projects. And BP is just one example, right? So the scenarios that most of the organizations have developed recognize that the carbon capture and storage is the most cost-effective solution to reduce the carbon emissions, while at the same time they guarantee universal access to the increasing needs of energy. Again, I'm saying and reinforcing what Ricardo was just mentioning. So these projections consider the contribution of natural gas with CCUS for power, for industrial sectors, and also for the hydrogen economy. And of course, CCUS is used for enhanced recovery of mature fields, which we have like 70% of fields in Latin America which are mature. So ARPEL and the member companies of ARPEL are supporting the implementation of CCUS, and they're also recognizing, we also recognize that in Latin America, there's still work to be done from the regulatory point of view to ensure there's a widespread scale up, right, of this technology fast enough, and of course, it needs to gain social acceptance. And together with that comes obviously the carbon pricing schemes, but that is another topic for another webinar. So those are my thoughts, maybe.
Thank you, Miguel. Some interesting observations. How about you, Decio? What are your thoughts about this?
Well, I believe that all those trends, they will create opportunity. But when you see large companies, especially the European majors, change their portfolio and divesting mid-life mature fields and starting investing heavily on renewables, you see opportunities for smaller companies like mine, I cannot. And then when you look at what happened in society during the past 200 years after the Industrial Revolution, you realize that the modern world, the contemporary world, is a result of affordable and abundant energy. So the contemporary world is a result of access to energy. So if we believe that we must continue in this process to bring progress to billions of people that are out of the energy markets today, we will need more energy than less energy. So the energy transition must be conducted with additional offer of energy, not with less energy. And we still have billions of people without access to electricity, billions of people using biomass to cook or to have access to life. So if you believe in this concept, and I believe, you understand that poverty is not the strongest enemy of the environment. Poverty is the strongest enemy and the strongest challenge to the energy transition. If we want to succeed in the energy transition, we must maintain this enormous inclusion process that we have seen during the past centuries, 2 centuries, 20 decades, more than 20 decades, in which quality of life has improved. So we will need energy, and we will still need oil and gas. And if the majors are reducing their presence in this market, they must be replaced, and they probably will be replaced initially by NOC, national company, especially the ones in better position in terms of competition. And I would say the Middle East companies like Petrobras, a strong asset base, and the survivors in this market will be the companies that will combine lifting cost, lower lifting cost, and also lower emissions. And then we have the challenge for the smaller companies that will step in some of those assets that the majors will sell. How they, with not so strong balance sheets, will be able to be competitive in terms of cost, also competitive in terms of emissions, reduce emissions, and how they can be responsible in order to take over those assets and be capable of using and maintaining the same quality standards, environmental standards, safety standards that the measures used to apply in those operations. So as a result, I see a world in which we must increase the offer of energy. So the oil demand cannot go down very fast and very strongly. It will go down, but it will go down slowly. And the companies that will remain in this business, like mine, they must be conscient that they must be efficient in terms of cost, emissions, safety, and environmental concerns.
Thank you, Decio. That's some interesting food for thought for companies looking to adapt and move forward over the next decade or so. Going to our next question, perhaps this time we can begin with you, Miguel. Yes, it is Miguel this time. Brazil, Colombia, and Guyana were rated by the survey's participants as the most attractive Latin American countries for oil and gas investments in the near and medium term. Do you agree with that assessment? And if so, why or why not?
I always have to have. You always ask me about rating the country's attractiveness, and you know I can't do that. I think in general the attractiveness of the Latin American and Caribbean region is to invest in oil and gas upstream activities is large and it is diverse. So all the countries have attractive features as well as issues to be improved always. Well, Colombia, let's talk about Colombia. They recently launched an auction on offshore areas under attractive terms. The ANH, the National Hydrocarbon Agency, offered the companies more contractual flexibility, free access to data, and also opportunities for interaction with stakeholders. And this, of course, is attracting local and international players. Also, important companies are operating in Colombia and are investing significant amounts of money in pilot research projects related to unconventionals, right? But the bill is always, but the bill definitely approved the fracking is still under consideration by the parliament. Although the ANH invokes that the moratorium could be lifted next year. So good things to be considered as uncertainties in Colombia. Brazil happens the same. Together with Petrobras, there are several IOCs focusing their work on the pre-salt reserves, which are vast, and they have quite low lifting costs. So Brazil is leading the global recovery in offshore oil and gas activity, and as we are recovering from COVID, right? This year they expect, for example, like 20 offshore exploration wells, and that is quite a number, right? Also, an important thing to know that happened after COVID, right, is the fact that several campaigns, exploratory campaigns, they were postponed. So the National Petroleum Agency was discussing the possibility of granting new extensions for exploration commitments and deadlines, and this was invoking economic and environmental reasons. So this, of course, is very good because it provides patience and pragmatism from the regulatory agency, right? However, one of the hurdles that the Brazilian government has to overcome is related to the bureaucratic process of environmental licensing, and this is seen by the operators as one of the key challenges. So we have, again, something attractive and something to be improved. Guyana. Well, Guyana is a game changer and should definitely be in the top 3 of the respondents' preferences. They have good quality resources, competitive production costs compared to other offshore basins. But considering the overall attractiveness of the Suriname-Guyana basin, as you mentioned, Michael, in the presentation, we should add Suriname to this list. Because although the production sharing contracts negotiated by Suriname are a bit more beneficial to the government compared to Guyana, right? This is compensated by the fact that Suriname has a regulatory and institutional framework in place. They also have an NOC like Statsoli that can provide a basis for a stronger local content, and they can disseminate human talent applicable to the development of the oil and gas industry. So these are things that Guyana has not developed yet, creating a potential source of uncertainty in that country. So again, things that are attractive and things that need to be considered. So as I said at the beginning, all these countries and other countries that I will not be mentioning, but were rated in your survey, they have large attractiveness as well as they have issues to solve and improve. And to accomplish this, it's vital that governments and industry have good communication. And that is why ARPEL, with the support of our member companies, have been doing as the only forum, the regional forum for cooperation between industry and government to support the development of the sector in Latin America and the Caribbean. Communication is key, government and industry.
Thank you, Miguel. I'm sorry for sending you a curly question again, but I thought you answered that very diplomatically and with some very interesting points. So thank you very much. Decio, what are your thoughts about the fact that most of the survey's respondents identified Brazil, Colombia, and Guyana as the best countries for investment?
I agree, and I would say I won't be as diplomatic as Miguel was, but I realize that he has a link, direct link to Brazil. I look to my window here, and I see a landscape that is reflecting a painting that I see behind Miguel in his wall, which is Rio de Janeiro seen from the other side of Guanabara Bay, Niterói. So I believe that really think that Brazil is the place. But and why I believe that Brazil is top. Not because I was involved in all this industry for a long time in Brazil in different positions, but because first, Brazil is large. Second, we have a variety of research that we do not see in other countries in the region, because we have a large reserve, the largest in the pre-salt province, very low cost, very effective in terms of emissions. But we also have a variety of mature fields, midlife fields that Petrobras is divesting and new companies are coming in. And we have by far the largest exploration acres in the region. So when you look at the below ground conditions, the ones in Brazil are the best in the region. And then you go to above ground conditions, the famous above ground risk. And I would say that Brazil is also very well qualified in this regard when you compare to other countries in the region. We have a tradition of respecting contracts. Brazil has never disrespect an E&P contract in history, and it's very positive. And I have been in different positions in Brazil, in the private sector, in Petrobras, in the regulatory agency, and I can testify that. We have improved the regulatory and legislative system with the change that were implemented after 2016 that were responsible for the enormous success that Brazil has had in attracting investment. To give you some numbers, we had around 100 bidding rounds in the world from 2017 to 2020. We had about 3,000 blocks that contracted this bidding round. We had something like 80 blocks in Brazil. We had something like 120 billion US dollars, about 100 billion reais, about 30 billion US dollars in signing bonus worldwide, more than 90% in Brazil. More than 90% of all signing bonds paid in the world by companies between 2017 and 2020 were paid for contracting blocks in Brazil. That is really impressive. And we are seeing the result of these investments now. So I believe that those are the reasons why the investors believe that it's the hotspot in the region. Of course, we have Colombia, we have Vaca Muerta in Argentina, we have Guyana and Suriname, but these are new provinces. But I agree, Brazil is the hottest.
Thank you very much for that response, Decio. I didn't realize that was Rio de Janeiro, but it is indeed a very beautiful image, beautiful city. Ricardo, what are your thoughts about the best country for oil and gas investments?
Certainly, as Miguel and Decio commented, there are opportunities on those countries that are related to, let's say, materiality of the projects, okay, which is important, and also some country conditions. But I would say, you know, Tecpetrol is a Latin American operator. We have operations since Mexico to Argentina. We can be really working there for many years, and we have developed several projects there, different time, different opportunity. You know, it's like competitions for the E&P industry, looking for better condition. From time to time, that depends very much in many aspects. So it's not the same a small project that a larger project that combined with the macroeconomic condition, with the political condition, etc. So and also the ability as an operator to work on those countries. So we at Tecpetrol has been successful working on all the countries. We have been working and are working there. And for example, you can see Argentina with the Vaca Muerta and our field 14 de Piedra, even in difficult macroeconomic conditions, companies have been able to develop the field, putting in a very competitive operational standard the fields, reducing cost, and etc. So it's difficult to assess one or two countries as the best opportunity. For sure, there are some structural, let's say, and materiality issues, but I would say that we have to have a wide open eyes looking opportunity and the moment to do the things, and using all the company's capability to develop the project. So and more, as we have talked before in the previous question, it's a more changing world, not only because of the energy transition, but also because of the volatility overall in all the conditions. So the assessment of the opportunity becomes more dynamic, let's say that way, and you have to be prepared and ready and looking for opportunity in all the countries that, as we can see, also are changing by year to year because of political pandemics, etc. situations. So it's more challenging, but more opportunistic situation also to do projects in Latin American in the way to capitalize all the experience developed there.
Thank you, Ricardo, for that response. Political and economic uncertainty was identified by more than 60% of respondents as the biggest threat to Latin America's oil and gas sector. What are your thoughts about this, and which countries pose the greatest risk? I understand that probably it's not in some of your interests to be mentioning countries that are at risks, but perhaps if not, then challenges that some countries are facing. Perhaps Decio, you can begin again, please.
Yes. When you go back in history and you analyze what happened in Latin America since oil was discovered more than 100 years ago, you realize that nationalism and interventionism was always present. It started in Argentina in the 1920s, 100 years ago, when Moscone was appointed as the first CEO of YPF, and he was a strong supporter of state monopoly. And YPF was not a monopoly in Argentina, but his ideas influenced the region. And then you have nationalization in Mexico, and Bolivia, the creation of YPF, and then Brazil in the end of the 1930s, they created the National Council for Petroleum. Then you had a series of other countries like Colombia, Ecuador, doing the same, and then Venezuela in 1975, 76. And as a result of that, and I have studied that in depth, as a result of that, you realize that every time you have intervention in this country, the result was a reduction in production. At best, you have seen leveling of production flows. That happened everywhere. Then when you see what happened in Venezuela, we used to produce more than 3.5 million barrels. Then we have the nationalization, and then production went down, and then they brought investors in the 90s. Production went up to more than 3 million again, and now we know that Mexico was producing more than 3.5 million barrels a day. It went down to less than 2 million. It's today, and even so, the reforms are being over. Colombia national intervened in the end of the 40s, the beginning of the 50s. Production went down, and we see the good result that we have with Ecopetrol, and then the creation of the A&E. And when they opened capital in Ecopetrol and made it public, the production went to more than 1 million barrels a day. When you see what happened in Brazil, in the 70s, Petrobras used to produce 200,000 barrels a day, less than 200,000 barrels. And production in Brazil increased. It went to 1 million barrels in the 90s as a result of the discoveries in the Campos Basin offshore deep water. And why Petrobras was able to be successful in deep water? Because it was modernized. We authorized in the 70s foreign companies to sign risk contracts in Brazil. Petrobras started to have contracts with those companies. Petrobras had an international branch to operate outside Brazil, and then make partnership with companies, and then it was prepared for this new world, which is normally challenging for a national company. Then we have the opening in Brazil in the 90s with the creation of the Petroleum Agency and the bidding rounds. Petrobras started to partner with international companies, participate in the bidding rounds. We discovered the pre-salt, and now production is 3 million barrels a day. So history tells us that when you have competition, when you have investment, when you can apply technology, the results are there. So this is the lesson. When you look at Argentina, Ricardo is there. I have worked in Argentina as well. production was double in the 90s when we have the opening up and the privatization by YPF. And the process was reverted, and now we have a production in Argentina which is half of the production that was peaking in the 90s. So I think that when you look at that, the answer to this question is the countries which were able to open up to attract investment, to attract technology, and to let the good management practice to be applied. Each one has its model in certain periods of time. But then you look at what happened with PEMEX, with Petrobras, with YPF, with PDVSA, and with the private company, we will see that in each one of those countries, the golden period was during a moment that there were no or few restrictions to investment, to attraction of capital, and to the use of technology.
Very interesting, Decio. Thank you for that response. Ricardo, what are your thoughts?
I agree with Decio in general concept. Let's say it would be preferable, okay, to have stability, to have all those conditions that again we have discussed in the past question. Probably in the world this would be the no so sure condition forever. So you should be prepared to adapt to changes, and again, materiality and opportunity of the project and operator capabilities are more needed than ever to adapt and to have a quick response. We, as Czech Petrol nowadays, are developing, for example, a project in Colombia. Argentina is the most emblematic case in which we have this year ramped up from 11 million cubic meters of gas to close to 18.5 million cubic meters. Okay, because even though the macroeconomic condition of Argentina with the Plan Gas 4 in Argentina allows company to plan, okay, a development, and most of the company has well responded to this and increases significantly the production. Again, because we have a very significant play, which is Vaca Muerta, in which the companies and the contractor have been able to have productivities and very significant, and also to reduce cost. So again, an opportunity that you have to look all of them together. Okay, not only let's say the political or the legal, etc., but you have to have the materiality of the project and the capability of the operator. So today is more difficult than ever to assess a risk. For sure, if you will, I don't know, to set your ideal, there are all of us can agree which will be the better condition, okay, that you will also prefer to reduce risk. But probably risk and uncertainty will be the only thing that will remain fixed for the future. Okay, and you need to change and adapt. I'm not trying to be politically correct, but just to understand it that we have a very quickly unchanging world. Let's see, Latin American 5 years ago, 4 years ago, and we are now talking about changes, not only the pandemic, but also the nationalisms that going back and forward from one model to other, different model to lead the country, etc. So I don't know if the world is looking for a new equilibrium, and there will be many backs and forwards on this point. But for sure, we as the company, as they say, strive for the best, but prepare for the worst, and get ready to work and to apply. I agree with Decio that technology and capabilities are very helpful in this time to cope with many of the problem, not only below ground but also above ground, because allow to reducing costs and operating more safely, and with respect with the environment, also allowed you to meet all the necessary standards to move forward. We as Tech-Petrol have also a energy transition direction, and we are working in the countries in Latin America in carbon capture storage also, and renewable energy generation, etc., etc. So we are working on that. There are opportunities in both sides, and we need to adapt and move on. But still, there are many things that they say, when there is a will, there is a way. That's true, but you have a technological issue to resolve, and this will take some time, probably less time that was expected, I don't know, 4 or 5 years before, because also I would say the push on the society, and also all the funds, etc., to move quicker, on energy transition helps to this, but things need to mature, and technology need also to mature. So again, there are opportunities in both sides. For sure, you have to work responsible, and again, working in both sides of the equation. As I mentioned, we are not only working on very strong in the gas, as is the example in Fortín de Piedra, also developing field that we have in Mexico and Colombia, and in Ecuador we also are participating in some fields, and in energy transition. So there are a lot of things to do. We have a more variety of opportunity, and this need more skill and more adaptativeness from the companies.
Michael, can I jump in?
Ricardo, thank you. Yes, of course. Yes, yeah.
What Ricardo was mentioning is just an example. I was the CEO of a large operator in Argentina and in the region about 10, 15 years. And when you do not have market conditions, then we start with all this, ideas. Of course, companies adapt. But the market at the end is sovereign. Ricardo mentioned Plan Gas 4. I remember the original Plan Gas, maybe in 2005 or 6, 7, I don't remember. If the original Plan Gas was a success, there was no need for Plan Gas 2 and 3 and now 4. That's what I mean, that's the lesson. Let market conditions work. Then you have capital. Then you have technology. Then you have management, adequate management. That's the lesson that we must learn in Latin America. Or we'll see Plan Gas 5, 6, 7, 8. That's it. That's my opinion. Why I say that Brazil is the best place for investments in the region? Because we have opportunities for different types of companies, and we do not have Plan Gas 1, 2, 3. Okay? Sorry for the interruption.
No problem. Thanks for that insight. We're running out of time, so Miguel, I might just get you to maybe provide a quick opinion on this topic. And also, I just want to throw in one question from the audience, which is related, talking about the regulations in Mexico and the fact that the Mexican market isn't as attractive now as it was, say, 5 years ago. How do you feel this playing out in the rest of Latin America? Do you feel that investors, instead of looking at Mexico, will now be looking more at Brazil, for example, or more at Argentina or Colombia? Where do you see the oil and gas operators and service companies that were looking at Mexico, where will they migrate to, if they will migrate at all? So if I could just combine that with the previous question for you to summarize, Miguel, and perhaps the other panelists can provide their opinions on that question as well.
Okay, yes, I will concentrate, as you said, in the political or legal uncertainty. You actually combine that, and sometimes political and legal risk, they're mixed or confused as one. So in my opinion, the survey responses are reflecting more an interpretation related to the legal uncertainty rather than to the political risk associated to resource nationalism or to favoritism towards the NOCs. The fact is that with no exception, right, governments in Latin America, either from right, left, or center ideologies, they're trying their best to develop their resources. They know that they need foreign investment to maximize the expected net value of economically recoverable oil and gas. So to accomplish this, the governments devise strategies, policies, or regulations that in the short, medium, and long term may prove them right or not, as Decio was mentioning with Plan Gas, for example. And that is what I think the responses to this question of the survey are considering. They were made having in mind issues like future legal and regulatory frameworks or the terms of contracts, which can always be improved to the specific energy scenarios and objectives of the governments. So, and regarding specific countries, we are observing, of course, there is an abundance of IOCs moving into Guyana, Suriname Basin, Brazil, and Mexico, despite the fact that the conditions are not as favorable now in Mexico as they were during or when the energy reform started in 2014. So, but they're still trying. They are working with government through the National Industry Association. And one thing I would like to point out is that we should see this pragmatically, but we should also be considering what is the position of the government in place when they are developing these regulations. Not only seeing it from the point of view of the investor, or only trying to see, well, this is the best because this is what we think. So we need to consider the condition, the overall objectives of the country in the long term. Sometimes they might go the right way, sometimes not. Time will tell.
Thanks, Miguel. We've literally run out of time, but maybe just a 1-minute response from both Ricardo and Decio, if he wants to have input as well, about Mexico and perhaps if there is, more interest in other countries as a result of what's happening in Mexico, or perhaps what might be happening in Peru or even in Colombia with the social unrest. How do you feel this playing out in the next year or the next 4 or 5 years? Perhaps Ricardo, you can.
So,
if you feel
sorry, I lost. It's a question for me about Mexico.
Yeah.
Sorry.
Yeah. Yes. Perhaps if you feel comfortable about commenting on the situation in Mexico, if you feel that perhaps investors are looking elsewhere, and where might they be looking? Not only oil and gas operators, but also service companies.
Okay, we are in Mexico. Tecpetrol entered in Mexico even prior to the energy reform, when the first contrato obra pública financiada, I don't have the exact English for this study. This was year 2004, and we entered Mexico to to be prepared when the reform appears. Finally, 2015, we could migrate the contract there in Mexico and start participating in what's a very successful bidding round from the very beginning. And now, as you know, there are a new administration that have a different thoughts in terms of which would be the path for Pemex and private companies. So that they had there were no additional bidding rounds, but still analyzing. So they are, as far as we had met with them, they are analyzing how good were the bidding process for the country. We as a private company know that they are very useful also to help Pemex on through partnership to help to develop the country. But we see a positive path there. We think that once the results are being accounted and reviewed by the administration, there is no doubt that continuing with the process of allowing private company to complement Pemex investment and development field there will be very useful. And in general, the climate, Mexico is an oil and gas country. Society are accustomed to that. So I see that companies are waiting for the new opportunity to participate in some fields, and as far as also exploration results are appearing in the markets. So we are expecting there in Mexico continue working in the development in a gas field that we have in the border with the United States in the Mission Block with very good results.
Thanks for that, Ricardo. I don't know if Decio, you have a comment just before we finish, and maybe if I can just ask a question that wasn't planned, but is Analta perhaps looking at markets beyond Brazil, or is this time Brazil really the sole focus of your company?
Our focus is to grow in Brazil, and international expansion will be a second step. Just to complete what I had said, you know, it's the same for Brazil, Mexico, Venezuela, Argentina, Saudi Arabia. If you have the funds, if you have the research, you can select if you go to national company or attract investment. But if you don't have, you have no choice.
Excellent. Some very good points there. We've run out of time, but I'd like to thank you all again for giving us your time today. The comments were very insightful. I'm sure our audience found them very interesting as well. Thank you again for joining us. And I'll pass it back to our content director, Cesar Iliano. Thank you again.
Thank you, Mike. Thank you, Miguel, Decio, and Ricardo for this interesting conversation. I want to remind the audience that all who registered for the webinar will get a link to watch the recording of the session and a copy of the report with the survey's results. I want to thank all BNamericas clients who joined the webinar, and to those who are still not subscribed, I invite you to visit BNamericas.com and take a look at our great content. Thank you very much. Have a nice day.
Clients change, businesses change. The world is transforming faster than ever, and the opportunities are there, waiting for us. Over 20 years of digital innovation have turned us into the leading business intelligence provider in Latin America. BNamericas has a database with thousands of industrial projects, company profiles, key contacts, news, reports, and data, all in one easy-to-use platform. Every day, more than 50 on-the-ground journalists and experts analyze the region's major industries. Explore projects that feature opportunities for your business. Find the companies participating in those projects and connect with their decision makers. Make the best business decisions with all the facts and insights you need about the industries that are driving the Latin American economy. Get timely reports with the latest news about projects, regulations, and investments. Stay on top of the business trends. Find out what the risks and opportunities are for your business by reading the reports and analysis of our on-the-ground experts throughout Latin America. Redefine your business strategy and choose the path to success. BNamericas, connecting opportunities.